Thank you for tuning in to Dukascopy TV. Now, there has been some important Chinese data out today, including Chinese exports, imports, trade balance and Yuan loans. I'm joined on the line by Schwartz, Chief Asia Economist at BBVA in Hong Kong, to have a look at this data in further detail. So first of all, Stephen, Chinese exports actually defied expectations as they grew 14.1% in December. Now, what do you think are the main reasons behind this sharp increase? And are you expecting similar figures for 2013?
Yes, the December export outturn of 14.1% was certainly higher than we had forecast. Our forecast was 6%, and I believe the consensus was about 5%. It's an encouraging outturn, and it's helped to lift sentiment today. We've seen that in both the currency and equity markets in China. However, it is just 1 month of data, and the data has been up and down. November was a very weak outturn after stronger outturns in September, October. So we wouldn't read too much into 1 month's data, and there may be some special factors why November was depressed. Overall, export growth for 2012 came out at about 8%, which was a relatively good performance given the very weak external conditions. And we expect export growth to be broadly similar in 2013, given our outlook for the global growth outlook, particularly continued sluggish growth in Europe and the U.S. I would note that exports to the U.S. did particularly well in December, along with exports to other emerging markets. There was some improvement in Europe as well, but exports to Japan were quite disappointing, reflecting weakness there and the ongoing geopolitical tensions between the two trading partners.
And imports were forecast to have increased 3% from a year earlier, up from November when growth was actually flat. Now, what are your thoughts on December's figures, and in particular China's crude oil imports for 2012, which grew at a relatively modest pace of 6.8%?
Yeah, well, there's a very strong correlation between China's export growth and imports, because a large share of imports are actually processing imports, that is, inputs that are assembled with value added and then re-exported. So it's quite natural that we saw a rebound in December imports along with that very strong pickup in exports. Overall, it led to a very substantial trade surplus for the month of almost $32 billion. And a very significant full-year trade surplus. However, overall, the current account surplus by our measure declined to about 2.5% of GDP in 2012, down from 2.8% in 2011. Now, this is our estimate at this stage. And that would be in line with this declining trend in the current account. I wouldn't read too much into the crude oil imports, actually, for China. Most of China's energy demand is met by coal imports. And overall, we estimate the full-year growth outturn to have been 7.7%.
Chinese trade surplus climbed to $31.6 billion in December. What were the main reasons for this jump, and what is your forecast for January's trade surplus and for the remainder of 2013?
Yeah, we have to be careful about the January trade surplus because we're getting into the time of year of the Chinese New Year in early February, and there'll be important shifts ahead of the New Year effect. So we'll probably have to look at the data for the combined months of January and February. But we would anticipate right now that the trade surplus will remain similar in early 2013. As I mentioned, the trade surplus for all of 2012 was very substantial, reflecting somewhat subdued import growth and still reasonably strong export growth, which we would attribute to the strong demand from other emerging markets, and particularly here in Asia. We've seen very encouraging intra-regional trade in Asia that's helped boost the economies here despite weak demand outside the region.
And finally, looking at new yuan loans, they fell more than anticipated last month. Stephen, what do you think about this and also about money supply, which increased 3.8% in December from a year earlier?
The new yuan bank loans taken in isolation was quite disappointing. However, if we look at a broader measure of credit growth, which the authorities call total social financing, that actually picked up. And what it reflects is there's an ongoing shift right now away from bank borrowing more toward the capital markets, particularly bond issuance, both by corporates and by local governments. So overall, credit growth is actually quite healthy and in line with previous estimates, which is consistent with the pickup in growth that we're seeing in the Chinese economy. M2 growth was also at 13.8%, pretty much in line with the authorities' targets and the consensus forecast. There has been, during the course of the past year, somewhat sluggish deposit growth because of low deposit interest rates, with customers preferring to park their money in wealth management products, which is fueling the growth of the shadow banking system, and that remains a risk to the outlook because of domestic financial fragilities that are building in that sector.
Thank you very much, Stephen. Tomorrow I'll be conducting an interview for our Targets in Focus looking at commodity currencies, so make sure you tune in for that. Goodbye for now.